Okay. Get your copies. Okay, for yourself and for others. All right. Still on issue of shares, basically. Okay, and last class we talked about call in arrears. Okay, because we're still talking about raising funds through shares or by means of issuing shares. Okay, and then in this case we're talking about instrumental payment. That is, the shareholders or the applicants or the investors, make payments for the units allotted to them in form of what? Installments. So, like I said, when you have, let's say, application and allotment, and then after which you're going to be having calls, like first call, second call, and all that. Okay? So last class we talked about call in arrears. Okay? And then for call in arrears, we said that the company, okay, made calls to the investors to make a particular payment. But at that point of reporting, the shareholder there to make the payment. So what I'm saying is this: maybe first call and second call. So maybe here we have 10 kobo, here we have, let's say, 70 kobo, and here we have, let's say, 40 kobo. So this is allotment and application. So at this point, you expect to pay 70 kobo as an investor. So if you're called at this point and then you did not make the payment, it is called call in what? Arrears. Okay? But it's also possible that you make payments when you have not been called. That's what we call in what? Advance. So today we're looking at accounting for call in advance. Okay? So what we are saying basically is that as at the point of reporting, calls have not been made for applicants to come and make payments, but some applicants made the payments. Okay? Okay? So what we're trying to say here basically is that, let's say for instance, 10 kobo for application and allotment, first call 70 kobo. Let me say, okay, first call was made and all shareholders paid. But let's assume some shareholders in this category made their payment in first call. As in, when they had the call for the first time, they made payment for both first call and second call. You'll agree with me that the second call was not due yet because they've not been called to make payment. You're supposed to make payment for first call. But if, as at the point of making payment for first call, you also make payment for second call, that unit of second call paid for when it has not been what? Demanded for, or when call has not been made for it, is called what? Call in what? Advance. Now, in accounting for call in advance, we are going to introduce something called calls not yet made, or you can use the word calls not yet what? Effected. So what I'm saying is, for call in arrears, the call has been due, okay, but the business is yet to receive the cash or the payment from the what? Investor or from the shareholders. That's call in arrears. But calls not yet made implied that the investors, okay, have not been what? Informed to come and make what? Payment. Okay? The investors have not been informed to come and make what? Payment. Okay, that's calls not yet made. So even though technically the shareholders, okay, have taken units which they ought to have paid for, okay, but it is not yet time, okay, by the method of payment for them to make what? Payment. So technically they are owing the business, okay, for such units, but it was not due for them to make what? Payment. So the business is yet to what? Call them to honor their what? Payment. So that's called not yet made. So if, for instance, we have 10 kobo, 70 kobo, then we have 40 kobo for second call. So if I make payments or if I make call for first call, by implication, the second call is not yet made or is not yet what? Effected. Okay? Now, that does not make it call in arrears yet. You see what I'm trying to say? But when we now make calls and then they are yet to pay, it becomes call in what? Arrears. Okay? So technically, the total 40 kobo here is call not yet what? Made. So whether you have made payment for it or not, it's not the argument here. The argument is that the company is here to what? Tell you to come and what? Pay. Okay? That's called not yet made. But when the company says come and pay and you are yet to pay, it becomes called in what? Arrears. Now when you pay while you have not been called, it becomes called in what? Advance. So let's take for instance. Of course, when you say call in advance, it means that the business is technically owing the investor or the shareholders at the point of reporting, because he the investor or the shareholder is not has not been called to make payment, but he's making what? Payment. Okay, so let's take for instance, as usual, of course, let's do our normal simple illustration. We have our assets here. Okay, so let's say non-current assets and let's say current what? Asset. Okay, so let's call this 1000, let's call this 200. So we have 1200. So this is represented by what? Liabilities. Okay, so let's say short-term liabilities or non-current liabilities. Let's assume that to be 300. Okay, and then our share capital, let's make it 900. So it becomes 1002. So let's assume that what we had intention to raise 100 naira. Okay, now the 100 naira, let's say, is in two forms. Okay, so we have 100 units. Of course, that will be at what? 1 naira per share, right? Now let's now say it's broken down into application and allotment, first call and what? Second call. So let's say here is 20 kobo. Let's say here is what? 10 kobo. And then let's say here is 70 what? Kobo. Okay, now of course, if we have this paid and then we have this paid, so now this 20 kobo application allotment first call has been made and paid, and then this has not yet been what? Called or effected. So technically we can say that what? Application and allotment, of course, as usual, has been paid for. So that means the money will go to the bank. So 20 kobo times 100, that's 20 naira. Okay, then here we have our first call, of course, that has been paid 10 kobo, that's 10 naira, right? Now the second call, now let's assume that call has not yet been made. So technically, even though the shareholders are owing for this, it was not due for payment because calls have not yet been what? Made. Call, of course, it's going to be what now? Say second call. So we're going to have calls not yet made. That will be 70 kobo times 100 units. That's 70 naira. Okay. Now you would agree with me that out of this second call, there was what? An advance payment of what? 10 units. Okay, so of course this will go to your ordinary share capital 20 naira. This will go to ordinary share capital 20 naira. Let's take this to ordinary share capital 20 naira. Okay, 70 naira. Now in our bank, okay, so we can see that application we got 20 naira. First call we got what? 10 naira. Now remember, we've not made call for 70 call, but 10 units was paid for. So that would be 7 naira. So that would be what? Call in what? Advance for what? 7 naira. So total money received in the bank now is what? 20 naira, 10 naira, and 7 naira. Okay? So, of course, you agree with me that we are going to have what? Call in what? Advance. So our call in advance here, of course, we have bank. How much was taken there? 7 naira. Now we have our calls not yet made. Call not yet made. Okay? Of course, that will come to debit side here. We say second call. How much? 70 naira. Now, what we're trying to say here is that this 70 naira will not make calls for it. So technically, even though the applicant are still owing for it, we've not yet demanded for the what? Money. So you can see that your calls not yet made is acting in the form of arrears. But the one is that as at the point of reporting, we've not yet demanded for the money. But for calling arrears, at the point of reporting, we've demanded, but payment has not been what? Made. So this is a debit balance here. So of course, remember what I told you: assets, debit, liabilities, credit. That's the behavior. Expense here, debit, income, what? Credit. So here is more like an asset, of course, more like a debtor here. So look at your bank here. How much do you have in your bank now? Technically, you have 37 naira. So we can bring in our bank here. Bring in our bank here. How much is that? 37. Okay. Of course, we have calls not yet made. Calls not yet what? Made. How much is that? 70 naira. Okay, and then look at our share capital. Where's our share capital now? Let's open it up for our share capital. Ordinary share capital here. Of course, from application, we have 20 naira. From what? First call, we have, how much is there? 10 naira, excuse me. 10 naira. And then, what do we have here? Second call. This is application and allotment. This is first call. Second call is where to have what? 70 naira. Remember that what? This money, when you add it up, is at par though. So that means that our ordinary share capital, we have what? 100 naira here, and then that will increase from 900 naira to how much now? 1,000. This will be 1,000. Okay. Now remember, look at our call in advance. It's behaving with what? Behaving like a credit balance, or like what we call, it's having a credit behavior here. So that's not like a liability to the credit side here. So that means that we have call in advance coming in here. Okay, it's coming in here. So we have, let's put it somewhere here before the share capital. There's a call in what? Advance. How much is that? 7 naira. So we've imputed the ledger balance behavior. So we have this here, 70. Our bank here is 37. Okay. So here we have our short-term liability to be what? 300. Call in advance, of course, liability from 7 naira. And then we have share capital increase to what? 100 naira. So if we add up everything, we should be having the same what? Balance. Okay? So what do we have here? So this is 1,000. 12. Of course, this will be 107. So 12 plus 107, that would be what? 1307. So here we have 1307. You can see that as agreed. Now remember, this is an approach where we're trying to what? Capture this item behavior differently. But I told you that some suggestions will net up the balances. So what I'm saying is that some suggestions would take this call not yet made and this call in advance, net it off against what? Against the share capital. So what you'll be having 1,000 plus 7 minus what? 70. Okay, so what do we have here? This is 1,007. So that will be, if we say plus 7 minus 70 here, this would be minus 63. So that will be 1,000 minus what? 63. Okay, so 10 minus 3 here will be 7. 9 minus what? 6 here will be 3, so it will be 937. Can you see that? So that means instead of putting call in advance here, we'll remove it. Then our share capital will be what? 937. Okay, then here we will not put this again. That's the second suggestion. So you can see that the balances will now change. Okay, so this will be what? 7321. See, 7321. Can you see? You can see that the asset here is same as what? The liability. Of course, you know your accounting equation is at play here. Your ledger balance is at play here. You have to really take all these classes. We have all these classes on Jados Consulting. You can as well take the class before you come here. Of course, to look at what we're doing here. Of course, if you don't do Jados, you can go to YouTube to take the classes. Okay. So basically, this is a summary on how to account for what call in what advance. Of course, if you have questions, you can reach me on the numbers that I'll be there to reply you with the right answers. Let's look at this question so we can have an idea of what I'm talking about. So we have the following represent the balance sheet of My Adventure PLC. So we have statement of financial at 30th September 2011. So we have the non-current asset, current asset, blah, 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 like that. I'm sure you're used to that by now. Then here we have finance by liabilities, short-term liabilities reserve, and all that. Authorized share capital is 10 million, 1 naira per share. Ordinary share capital is 1 naira per share, 6 million. So we have on the 1st of 2011, the company issued 1 million ordinary shares to the public for subscription. By the end of November, all shares were subscribed for, an application and allotment completed at 40 kobo per share. By the end of December, first calls were honored at 50 kobo per share, while a second and final call of 30 kobo is expected to be made 2 months after. A shareholder with 100,000 units of shares paid the second call along with his first call. Showed necessary entries to record the shares issued as it reflects in the business report of 2011. So, what you are saying here, of course, this is dated. What they are saying here is that shares were issued and then there's a dating for the instrumental payment. There's a dating for the instrumental payment. So we're going to be looking at that now. There's a dating for the instrumental payment. So what do we have here? My Adventure PLC. Okay, so by the end of November, application allotment concluded at 40 kobo per share. So we have November, let's say November 30th, right? So application allotment concluded at what? 40 kobo. And then what else? Say by the end of December, first call was 150 kobo per share. So let's say December 31st, first call 50 kobo. And what are they saying again? They said what? The second and final call of 30 is ready to be made 2 months after. So 2 months after December will be February, right? So we start with February 2012. Of course, this is 2011. This is 2011. So second call is about 30 kobo. So basically, the total expected fund to be gotten per share is this is 120 kobo. Okay, right? Yeah. So what's the nominal value? Nominal value there is what? 1 naira. So we have nominal value to be 1 naira. Then that means we have a premium here to be what? 20 kobo. So you can see that of course the share was issued in 2011. Okay, and then in November 2011 we have 40 kobo. Then 2011 December we have 50 kobo. Then the second call will be the following year, and then we are reporting 2011. So you can see that automatically you can, or technically you can see that the second call has not yet been made because it will be made in 2012. 2012 is the following year, but we are reporting 2011. So at 2011 we are reporting 30 kobo call has not yet been what? Made. Okay, but now they're not saying that what? A shareholder with what? 100,000 units of share paid the second call along with his first call. So when they were making payment for first call, somebody here paid his own second call. That is the call in advance we are talking about. Okay, so total units issued is what? 1 million. All right, so let's go. Application and what? Allotment. So that will be November 30th, right? So let's go. Let's just say 30th November 1-1. So what do we have? Bank there will be 40 kobo times 1 million. That's 400,000. Okay, of course, this will go to where? Ordinary share capital. How much? 400,000. So what's the next guy here? The next guy here is what? First call. So we have our first call. That's 30 December 31st. Bank, that will be 50 kobo times, or this is times 1 million units. Times 1 million units, right? So what do we have there? This will be 500,000, right? So of course, ordinary share capital will be what? 500,000. Okay, now second call. Remember, call has not yet been made for second call. I already explained the difference between call in arrears and calls not yet made. So second call, right? So as at 31st December 11, so we have calls not yet what made. That will be 30 kobo times 1 million. What they are there? 300,000. So this is going to a ordinary share capital. 300,000, right? So from here now, you have calls not yet what made. That will be second call, right? Of how much? 300,000. So you can see that your second call is having a debit balance. So we have balance order here for 300,000. Okay, so let's proceed. What's the next one there? The next one there, we're going to have what? Bank. So how much do we have in the bank? We have 105. There's a balance brought forward of 1,050,000. So from applicant allotment, we had 400,000. From first call, we have 500,000. Now remember, they said what? That an investor, what they say there? A shareholder with 100,000 units of shares paid the second call along with his first call. So when there's a guy here that has 100,000 units, so we have 100,000 times 30 kobo. There's a guy here with 100,000 units that paid his along with this. So 100,000 unit times that should be 30,000, right? Let's check. 100,000 times 0.3, 30,000. So there's a call in advance. So this is a call in advance. Call in advance of what? 30,000. So we have call in advance of what? 30,000. Okay. So what do we have here? So that's 30,000. Okay. Plus what? 400,000 plus 500,000, right? Plus 1,050,000. So what I have is carry down of 1,980,000. Okay, 1,980,000. 1,980,000, right? So our brought down, which is the new balance, is 1,980,000. So what's the next one here? We're going to have what? Call in what? advance. Of course, that's from here. Bank, how much? 30,000. So you can see that call in advance is having a credit balance here. Go down, the new balance is 30,000. What's the next one here? So we're going to have our what? Ordinary share capital, right? So what's the balance brought forward now? 6 million. So we have 6 million brought forward. So from applicant allotment here, we have what? 400,000. You can see it here. First call here, we have 500,000. Then our second call, ordinary share capital. Technically, they are still owing. Remember I told you that you have applied for the shares, you've been allotted, so you're supposed to pay for it. But we're taking payment bit by bit. So technically you're owing, but because we have not yet made call for the payment, that's why you're having call in advance. So second call here is what? 300,000. Of course, there's a premium here of 20 kobo. 20 kobo here now times 1 million shares. Right? That would be what? 200,000. Right? That's 200,000. So we're going to have what? Share premium. Share premium here of how much? 200,000. So what's our new balance here? Our new balance will be what? This is 1.2 plus 6 million. Okay, that's 7.2. Yeah. So carry down to what? 7 million. So both sides become 7,200,000. 7,200,000. So our new balance will be what? 7 million. So what do we have here now? Share premium. Okay. We have ordinary share, right? 200,000. So what our new balance there will be? So brought down here what? 400,000. Okay. So here we've been able to account for shares issued with an element of calling. So let's prepare the position now. What's the position now? We have statement of financial position. Okay, as at what? 31st December, that will be 2011, right? So what do we have here? Our assets, non-current. According to the question, non-current is what? 9,020,000. We have 9,020,000. Current asset there. What are current? Of course, excluding bank. What do we have there? 3,050,000. What's the next one? Bank. Our bank here is 1,090,000. So what are any debit behavior here? Call not yet made. What? 300,000. Right? What else? That's it. So let's add 9020 plus 3050 plus 1980 plus 300,000. We have 4350,000. This is your total asset. So this is represented by liabilities now. So what's the short-term liability according to the question? 3056,400. 3056,400. Right? So call in advance here. Credit behavior. So we have call in advance. How much? 30,000. Then what's our reserve? Let's call that note 1. So note 1. So we have our reserve brought forward. What do we have? 4063,600. 4063,600. So of course at this level you should know that share premium is part of reserve. What's our share premium here? 200,000. So 4063,600 plus 200,000. 4263,600. 4263,600. So we have 4263,600. So what do we have? Plus 2056,400 plus 30,000. I have 7,350,000. What do we have now? Share capital. What are our share capital? 7 million. What do you have? This is 0,000,053. This is 14. This will be your total. So you can see that our total liabilities of 14,350 million is the same as our total what? Assets. Okay. So what we've been able to do here basically, okay, is to what? Account for what? Shares issued, an element of what? Call in what? Advance. Of course, I also mentioned some what? New terms. I introduced call not yet made. Okay. And I'll explain how that is different from what? Call in arrears. Okay. So if you have questions, of course, you go through it on your own. If you have questions, you can reach me on the numbers displayed. I'll be there to reply with the right answers. We can drop questions as well in the comment section. I'll be there to reply with the right answer. Don't forget, you can support us by paying to the account displayed or pay for copies of my textbook for your partner library, or help us pay so we can distribute to students for free. Thank you.